Hello traders, and welcome back to another survival guide. In today's discussion, we're going to dive into the world of technical analysis and talk about a pattern that can help us better identify when an asset that's uptrending is in a temporary holding pattern and very likely is to continue moving upwards thereafter. The pattern that we're talking about is the cup and handle pattern. It's one that is relatively well known, yet many traders don't truly know exactly how it works. So at the end of all of this, hopefully you will, and you can add it to your trading arsenal. So let's learn about the cup and handle pattern, how to identify it, and how to trade it. Let's go. The cup and handle pattern is a popular technical analysis pattern that can help us identify bullish continuation patterns. And yes, this is it right here on the center of the screen. But let's first talk about the whole step-by-step process of what's really going on with the cup and handle pattern, where we have an initial upwards push, which on the left side of this image, you can see price has been pushing indeed upwards. Then number two happens where we have a price drop. In this image, it's really not that exaggerated of a drop. It can be any variety of things. It can be a slight casual drop like we're seeing here, or it can be a much more aggressive drop. But the most important thing is we have an initial upwards push followed by some type of price drop that's exaggerated over a lengthier period of time and not usually as steep as that initial upwards push or nearly as long lasting as that initial upwards push. Then comes number three, where we have the renewed uptrend. The renewed uptrend is going to be when we work our way up and then we find a bit of resistance and fall down, but very quickly we find support, and guess what? We continue moving upwards. That is the renewed uptrend. As we find this portion here, we are now building what is called the handle. The first portion is the rally, the second portion is the cup, and the third portion is the handle. After three happens, we then have number four, which is a continuation of upward movement. And in short, that is exactly what you think. After we find support after a very, very brief spout with resistance during step three, we work our way upwards and continue charging higher in true bullish fashion. Believe it or not, there are a set of rules of how and which each stage of the cup and handle pattern should adhere to, according to Mr. O'Neill, the founder of the pattern. Now, at the end of the day, it's going to be open to your interpretation, but an example of this is Mr. O'Neill said that the depth of the cup should settle somewhere between 12 and 33% from the original high. This can go as high as 40% during periods of high volatility, in his words, but once again, this is to give us an idea of how large each stage should be. The cup shape has a stabilizing period, or should have a stabilizing period at the bottom, where the asset price moves sideways, and this is what forms the cup's rounded bottom. Once the cup completes, there may be a 10% to, say, a 15% pullback, creating a downward price channel that is going to resemble the handle. And the handle is supposed to be much, much smaller than the cup itself, and it shouldn't pull back to more than 2/3 of the cup's height. Now let's talk about how to actually trade the cup and handle pattern. The majority of what we're going to be doing with the cup and handle process is actually waiting. That's because it's a very lengthy pattern. During the uptrend formation on the left, obviously we wouldn't be trading. During the cup formation, obviously we wouldn't be trading. And during the handle formation, obviously we wouldn't be trading, because what we are waiting for, the first actionable event, is when the handle finishes and finally breaks, hopefully breaking resistance, because once again, we expect a bullish continuation of the prevailing bullish trend. So what we're looking for is that resistance line of that downward sloping channel that has been created by the handle to break. We want to see price trading and closing above that area of resistance. Once that happens, many traders will trigger this as their entry point to buy. They'll use their stop loss location as the lowest point on the handle itself. And as far as their take profit goal, they'll usually look to gain the distance of the cup itself. The distance from the top to the bottom of the cup itself, more aptly described. But over here, let's say that we're looking at a scenario where we're dropping, I don't know, say 20 points from the top to the bottom, just as a brief estimation. That means when we buy on the breakout, our profit target would be about 20 points away. There are several advantages to trading the cup and handle pattern and getting good at it. One, for example, being that it's relatively easy to identify because of its distinct teacup-like shape. And the other is that it's generally going in the prevailing trend, so you usually will have momentum on your side. But the main drawback with the cup and handle pattern, as we briefly mentioned, is that it can take a while. With the chart that we're looking at here, for example, we see that on the left side of the screen, the cup and handle started beginning in 2011 and didn't finish until 2022. Now, before you run away and say, oh my gosh, I don't have a decade to wait for a pattern to finish, we can change the time frame of our charts. We can look for cup and handle patterns on anything from a 1-minute chart all the way up to, say, a daily chart. It doesn't matter. Any time frame is going to give you a potential location to find a cup and handle pattern. But the point is, in comparison to other technical analysis patterns, it does take a bit longer and a bit more bars to finally complete. Now, as with all trading information and all trading analysis, we want to use outside layers to help further confirm the read that we're getting. Identifying the cup and handle pattern can be very easy because of that odd shape. We want to remember that what's going to happen in a perfect scenario is that price will have been working its way upwards and found resistance. At this point, we are now going to expect price to fall and find some type of sideways moving momentum before returning back up to finish out the shape of that cup. After the cup has formed, we expect to see price to temporarily fall back down again. As it falls back down, it's going to create what is called the handle. Once the handle has been created and it hasn't fallen too deep down into the cup itself, we want to see the resistance to that handle broken. That is our time to shine. That's when we want to jump in. And until next time, good luck, happy trading, and I wish you well finding the cup and handle pattern.